All right, Discovery's share price ending 2% up today. Now, net profits were down 11% in interim results. It didn't seem to bother shareholders, though, because of the good showing coming out of Discovery Life and Discovery Invest. Hylton Kallner is the chair of Discovery's Exco in South Africa and CEO of Discovery Bank. He joins us now. Hylton, thanks indeed for your time. So, no dividend to shareholders once again. Where's the caution coming from? Because the results, seem to be convincing to some of them.
So thanks, Devan. And I think if you look at the normalized headline earnings, they're up 30%. And from our perspective, that's sort of the best representation of the operational result in the business. And so it's up strongly, and we're building a number of strong foundations in the business. So investing significantly in growth and strengthening the balance sheet at the same time, and showing good operational results. I think that's essentially, I think, what the market really reacted very positively to today.
What's the caution over the dividends? We're still concerned about perhaps the China business.
No, so I think the decision not to reinstate the dividend yet is really based on the fact that we're investing significantly in a number of growth businesses within Discovery. So the bank itself has a very sort of strict and well-governed capital plan, but we continue to invest, and the growth in the bank is really, I think, one of the features of the results in this period. We've seen client growth over 50%. Account growth well over 60%, so we now have over 1.4 million accounts in Discovery Bank. And so growth is really ahead of expectations, and that's where the investment is really manifesting, is in the sort of the new businesses that we're investing in, and in really, I suppose, strengthening the balance sheet to facilitate that growth.
Yeah, that's Discovery Bank. Just overall, though, I see clients are not lapsing on policy in your Discovery Health division. That's good news. Your life business returning to profit after feeling that pinch of COVID-19. So, would you describe those two areas as one of the sort of core areas where that strength really emerged from?
Yeah. So if you look at the business, the South African business had a really strong operating result, driven by that strong recovery in Discovery Life, as you alluded to. We've seen a really good result post COVID. Discovery Health is really an incredible business, and you see that coming through strongly in the results today. It has nearly 60% of the open medical scheme market membership in Discovery Health, and it continues to really grow strongly. And so that's not just a positive story, I think, for Discovery Health, but also for the economy at large, because it reflects really, I suppose, strong employment within our client base. And as you say, Discovery Invest also growing strongly. It's now nearly 150 billion rand in assets under management. Globally, the Vitality UK business really performed well. And the Vitality Global business, which is in over 40 markets across the world today, also had a very strong result. So operationally, if you look across all of the kind of different strands, we're really pleased with the results for the 6 months.
All right, having said that, just one on Discovery Health. I see your price increases are up. They're up 7.9% on majority of those scheme plans, and the upper end just under 10%. That's above inflation. Is it a challenge in this environment to curb those price increases?
So medical inflation has historically always run at about CPI plus 2 to CPI plus 3 percentage points. So the kind of corridor that you would expect medical inflation to run at, just given the dynamics of that environment in the current market, is around about 9 to 11%. So the Discovery Health medical scheme contribution increases, and it's really sort of a tribute to the trustees and the management within the Discovery Health medical scheme, has really been able to come in this year at the sort of right lower end of that market, that range. But importantly, the increase was delayed from the 1st of January to the 1st of April, really sort of utilizing the surplus reserves that have been built up over time to give quite substantial relief to the client base. So that increase is usually at a calendar sort of start. That was delayed to the 1st of April, and that relief really flows directly into the pockets of the membership base.
Hylton, just as I let you go, let's just a quick one on Discovery Bank there. I see you're still short of breaking even there. Just very quickly, how's the client take up on the bank at the moment?
So the client growth is really progressing well beyond our expectations. We're now bringing on over 1,000 clients per day, over 2,000 accounts being opened on a daily basis, and the growth has really been staggering. So it's ahead of expectations. It's ahead of plan. We'll continue to invest, and that's according to plan, given how young the Discovery Bank really is. But we're really pleased with the results, and we see the sort of the operational break even within the bank. Potentially by the calendar year end this year. So really sort of progressing really well, and we're seeing sort of client engagement, the spend levels, the payments, and the sort of fee generation in the bank progressing extremely strongly.
Yeah. Just very quickly, Finance Minister yesterday telling us that the economy is likely to grow by 0.9%. We know it could be much worse than that if you consider the power cuts. What's your take on just, the state of the economy at the moment and attempts to try and revive it? Because surely, Discovery banks a lot on that.
Yeah, so I think I guess the sort of economic growth is definitely negatively impacted by the energy constraints that we faced. Interestingly, we see spend sort of shifting to other parts of the economy. So we track it very, very closely, and there are areas like eating out and restaurants where we've seen really strong growth. So post-COVID, where those sort of industries really took a lot of strain, we're now seeing spend shift to them as clients actually start to eat out a lot more. Travel is really booming in terms of the overall spend, and that's positive in terms of sort of hospitality and the sort of the hotel industry, which really had a difficult time through COVID. So we're seeing a lot of pockets of positivity in the market, but obviously concerned about the impact that load shedding has on South Africans on a day-to-day basis, and that obviously is something we watch very, very closely. And we haven't seen the sort of the negative impact flow through into our client base to date, and we found that South Africans in general are incredibly resilient, and the economy itself and our client base is reflecting that.
All right, Hylton Kallner, Chair of Discovery's SA Exco and CEO of Discovery Bank. Thanks very much for talking to us.